Trump says the war ends in 2 weeks. Iran threatens tech companies. Brent crude moved $11 in a single day. So let me ask you something. Is this peace? Or is this the most expensive trap investors have ever walked into? I'm Roldán Ferrer, finance expert with over 25 years of experience in global markets. And in the next 5 minutes, you'll know exactly what to buy, what to dump, and what to watch before the market opens. Let's rewind. A few days ago, Brent crude was sitting at $119 a barrel. That's a wartime premium, fear built into every drop of oil. Then the White House announcement dropped, a pause on offensive strikes. Within hours, Brent fell to $108. $11. Gone. Now, $11 sounds like great news for your gas bill, right? But if you're an investor, $11 is also the sound of someone's portfolio taking a hit. The question isn't what happened. The question is this move real or is it a head fake? Here's the brutal truth about oil right now. We are sitting at a fork in the road, and both paths are extreme. Scenario A, real peace. If this ceasefire holds, if Iranian supply comes back online, if Strait of Hormuz traffic normalizes, analysts from Goldman to JP Morgan have projected Brent could fall to the $60 range within 6 months. That's a collapse of nearly 50% from peak. Energy stocks crater, oil ETFs bleed out. Scenario B, false truce. Iran's foreign ministry made a statement, and I want you to pay attention to this. They specifically mentioned Western tech infrastructure as a potential target, not military bases, tech infrastructure. If hostilities resume and the strait gets disrupted, we are looking at $150 oil, maybe more, within weeks. That's not a prediction. That's what the futures market is pricing in as a tail risk. So you've got a $50 swing in either direction, depending on a geopolitical situation that changes every 48 hours. This is why boring investors are losing money right now. You can't just hold and hope. Let's zoom out for a second. The S&P 500 just posted its worst quarter since 2022. Not just energy stocks, the whole index. Why?
Because war uncertainty isn't just an oil problem. It's a rates problem, a supply chain problem, and a corporate earnings problem all at once. When oil is expensive, margins compress. Airlines, logistics, manufacturing, chemicals, they all take a hit. And when Iran specifically threatens tech infrastructure, that's not a metaphor. That's a direct signal to the companies that make up 30% of the S&P's market cap. So the market didn't have a bad quarter because of bad earnings. It had a bad quarter because nobody knows what the world looks like in 90 days. And right now, that uncertainty hasn't gone away. It's just wearing a peace costume. Okay, this is the part nobody on financial Twitter is talking about, and it's the reason I made this video. In times of geopolitical stress, money flows into what we call safe haven assets. Gold, the Swiss franc, U.S. treasuries, Japanese yen. These are the places where scared money hides. Here's the thing, and this is the gem. Gold is your geopolitical truth detector. If this peace announcement is real, if there's genuine de-escalation, gold will sell off hard. Scared money comes out of hiding, rotates back into risk assets, and gold drops. We're talking potential move back to the 2200, 2400 range. But if this is a fake truce, if the war drums start beating again in 2 weeks like we've seen before, gold will fly past $3,000, possibly fast, because the smart money never fully believed the peace deal in the first place, and they'll pile in the moment it falls apart. So instead of trying to guess whether Trump's 2-week timeline is real, which nobody can, watch gold. Gold will tell you what the big players actually believe, not what they're saying on TV, what they're doing with their money. Same logic applies to the VIX, the fear index. If it drops below 17 and holds there, the market is buying the peace story. If it spikes back above 25, run. So let me give you the 3 things to do right now. 1. Don't make any big moves in oil or energy stocks until you see what gold and the VIX do over the next 5 trading days. Volatility is not your enemy. Reacting to volatility without a plan is your enemy.
2. If you believe the peace is real, consider trimming gold positions and rotating into beaten-down airline and logistics names that benefit directly from cheaper fuel. But set a hard stop-loss, because if you're wrong, you want to be wrong cheaply. 3. If you think this is a head fake, if your gut says this truce falls apart in 2 weeks, a small allocation to gold or a gold ETF like GLD is the cleanest hedge you can make right now. Not a bet, a hedge. The market right now is not rewarding predictions. It's rewarding optionality, keeping yourself in a position where you can move fast in either direction. If you want me to break down the specific ETFs and positions I'm watching across both scenarios, drop a comment below. I'll do a follow-up this week. And if this video saved you from making a panic trade today, hit subscribe, because this stuff is going to keep moving, and you want to be ahead of it.